Let's take a look at the state of the consumer now with two regional bank CEOs coast to coast. Joining us now is Ira Robbins, CEO of Valley Bank, which is more centered on the East Coast, and Brent Beardall, CEO of WaFd, more on the West Coast. Thank you both for joining us. Brent, let's start with you. In terms of the state of the consumer, we heard a report from Sharon Epperson last hour, which talked about basically the difficulty that consumers are having on all ends of the income spectrum in paying off debt right now. What are you seeing in terms of your customers, in terms of loan demand? How would you characterize the state of the consumer?
Yeah, I would agree. The customer's having a hard time dealing with these higher rates. It seems like it's been a while since the Fed increased rates, but the magnitude of the increase with the Fed going up 500 basis points, that's really set in on the consumer, and it's overwhelming to them. And then you combine that with housing affordability. That's the real issue we're seeing for our consumers at this point. Typically, businesses are doing quite well, though, and it's actually fun to see the optimism grow in the economy after these new tariffs set in.
Yeah, when we talk about tighter financial conditions as a result of where rates are, that's what we talk about. Ira, I know that the two of you came together on this idea of reforming deposit insurance. One of the key trends in the regional banking space right now is just the discrepancy between regional banks and bigger banks in terms of grabbing additional deposit share. The bigger banks have been more aggressive on that front. How do you see deposit insurance changing the game there? This was something that we talked about a lot after the 2023 failure. There was a big FDIC report in May of 2023, and then basically nothing happened. So I'm curious how you see this as filling that void or filling that gap in terms of competition between the regional banks and the larger banks.
Yeah, and I think it's a great topic and something Brent and I feel very strongly about. You actually mentioned that the larger banks were more aggressive. I would argue that the system's actually broken, and the larger banks are just taking advantage of what the system is creating now. They have an implicit guarantee over deposits. If you look at their market share back to the great financial crisis, the largest four banks' market share from a retail deposit perspective has doubled since 2010, since 2008, 2009, 2010. That was not the intent of what Dodd-Frank was. When you listen to Bernanke's testimony back in 2010 to Congress, commentary surrounding severe moral hazard with too big to fail. So deposit insurance is broken, and it's important that it gets addressed now. We saw in 2023 SVB fail, and 87% of those deposits left regional banks and went to large banks. The challenge with those deposits moving from regional banks like Brent's and mine into the larger institutions is there's no funding available for Main Street. We look at PPP as a perfect example. The larger banks only provided 1.6% in total of PPP loans across the entire country. It was our banks, Brent and mine, that are there providing loans to Main Street when Main Street needs it. But unless deposit reform is addressed, that's not going to happen.
And Brent, there's another potential competitor that's waiting in the wings here, which is stablecoins. And that's something that even the bigger banks have been concerned that they could see a deposit flight as a result of some of the recent regulations surrounding stablecoins. Is that a concern of yours, or how do you think regional banks can remain competitive given the threats to and competition kind of from all spaces?
Yeah, and that's really one of the things we wanted to talk about is this deposit insurance reform, because stablecoin is real. And I think it's going to be across the spectrum. It's going to be with the big banks. It's going to be with the regional banks. It's going to be with the fintechs. But as Ira pointed out, you look at the biggest banks and what they do, they're more of a hedge fund than they are a bank where you bring in the deposits and you loan it out. I have the utmost respect for JP Morgan. But their loan to deposit ratio is 55%. At WaFd, we're 98% loan to deposit ratio. And it's not a fair playing field. So right now we have two senators, one from the Republican side, one from the Democratic side, that are proposing meaningful reform that would level the playing field.
Ira, I have another question for you about commercial real estate. I know you've been diversifying the bank away from some of the CRE concentration you've had in the past, but you still do have exposure to office and multifamily in the New York City area. How are you feeling about the upcoming mayoral election, Zoran Mondani, and some of his proposals surrounding the city?
I'm not sure those proposals make a lot of long-term sense for New York. That said, I think New York is one of the most resilient cities that we've ever seen. And we have unbelievable people that want to live in that market that will make things happen. We can't have a government hand, though, that limits what developers and what landlords can charge. When on the other side, as Brent mentioned, there's been massive inflation. It just doesn't work. So we need to find a solution there as what's going to work for both sides. I'm optimistic that we'll get to the right place here. But once again, New York is resilient.
Can I just have a quick final question, Brent, in terms of the extent to which you think AI will allow you to cut headcount over the next decade? Are we talking 10%, 50% more?
I think it's more the latter. I think it's around 50%. And it's one of the things we talk to our customers about that they're most encouraged. We have a labor gap between what's available and what our customers need. And it's true for Ira and myself. And we think AI will allow us to bridge that labor gap. I think really there's going to be two sides of it. Those that are afraid of it, that stay away from AI, and those that embrace it and take advantage of the opportunities it gets. But I think it is meaningful, especially for the back office redundant type jobs.